Listen, I need to tell you something that's been eating at me for weeks now. I've been in crypto for 7 years, and I've seen every wild prediction you can imagine. But this one's different, and I can't shake it off. 3 weeks ago, I was having coffee with my buddy Marcus. He's one of those Wall Street guys who moved into crypto back in 2019. Smart money, you know? Anyway, he looks me dead in the eye and says, "I'm putting serious money behind XRP hitting $1,000. I literally choked on my latte. $1,000. Marcus, are you having a breakdown? But he wasn't joking. And what he showed me next changed everything I thought I knew about XRP's future. I'm talking about documents, insider connections, mathematical models that made my head spin. By the end of our conversation, I walked away questioning everything. So I did what I always do when something doesn't make sense. I dug deeper. What I found over the next 3 weeks of research has me convinced that we're all missing something massive. And I mean massive. So I did what I always do. When something doesn't make sense, I dug deeper. What I found over the next 3 weeks of research has me convinced that we're all missing something massive. And I mean massive. Let me start from the beginning. XRP has been my biggest holding since 2018. Yeah, I bought near the top like an idiot. Watched it crash to 15 cents. Held through the SEC lawsuit like a stubborn mule. Lost sleep, lost money, lost faith, more times than I care to admit. But I kept buying. Not because I'm a masochist, but because something about XRP's technology just made sense to me. The speed, the cost, the partnerships with actual banks. While everyone was chasing dog coins and NFT nonsense, XRP was quietly building the infrastructure for the future of money. Still, $1,000? That seemed like fantasy land. That's a 33,000% increase from current prices. That would make XRP worth more than most countries' entire GDP. It sounded insane. But Marcus isn't some YouTuber throwing out random numbers for clicks. This guy manages 8 figures in crypto assets. When he talks, institutions listen. So when he told me he was betting big on 1,000 XRP, I had to take it seriously. I spent the next 2 weeks diving into everything I could find. Technical analysis, fundamental analysis, regulatory developments, institutional adoption patterns. And slowly, a picture started forming that I couldn't ignore. First, let's talk about the elephant in the room, market cap. At $1,000 per XRP, we're looking at a market cap of around $100 trillion. Yes, trillion with a T. That sounds impossible until you realize we're not talking about next year or even the year after that. Marcus showed me a timeline that spans the next 15 to 20 years. And when you look at it that way, suddenly $100 trillion doesn't seem so crazy. Let me explain why. The global payments market is worth $2.8 quadrillion annually. That's $2,800 trillion moving around the world every single year. Right now, this money moves through a system built in the 1970s. It's slow, expensive, and completely outdated. SWIFT, the current king of international payments, processes about $5 trillion daily through their network. But here's the kicker. They don't actually move money. They just send messages. The actual settlement can take days and costs banks billions in pre-funded accounts around the world. XRP solves this. It's not just faster and cheaper, it's a complete paradigm shift. Instead of sending messages and hoping the money shows up eventually, XRP is the money. Settlement happens in 3 to 5 seconds, costs fractions of a penny, and requires no pre-funding. Here's where Marcus blew my mind. He showed me what he calls the tipping point theory. It goes like this. Right now, maybe 1% of global payments flow through crypto rails. Most of that is Bitcoin and stablecoins. XRP handles a tiny fraction. But there's a point. Marcus believes it's around 5% market penetration, where network effects kick in and adoption explodes exponentially. Think about how the internet grew. In 1995, less than 1% of the world was online. People said it was a fad, that it would never replace traditional communication. By 2000, we hit the tipping point. By 2010, everything changed. Marcus believes we're in 1995 for crypto payments. And XRP is positioned to be the HTTP protocol of money, the standard that everything else builds on top of. The math is staggering. If XRP captures just 10% of global payment flows, we're talking about processing $280 trillion annually. Even with XRP's fast settlement, you need massive liquidity pools to handle that volume. And that's where the $1,000 price target starts making sense. But technology alone isn't enough. You need regulatory clarity. And that's exactly what we're getting. The SEC lawsuit was actually a blessing in disguise. I know that sounds crazy. We all hated watching XRP get delisted and beaten down for 3 years. But Marcus pointed out something I hadn't considered. That lawsuit created the most comprehensive legal framework for crypto in US history. Judge Torres didn't just rule in Ripple's favor. She created a roadmap for how cryptocurrencies will be regulated going forward. XRP isn't a security when sold to retail investors. That's now legal precedent. Other projects are building their compliance strategies around the XRP ruling. But it's not just the US. The European Union just passed MiCA, comprehensive crypto regulation that's actually crypto-friendly. Japan has been pro-XRP for years. The UK is building its own digital payment infrastructure. And guess what technology they're looking at? Singapore, Switzerland, Australia. Everywhere you look, regulators are creating frameworks that favor utility tokens like XRP over speculative assets. The writing is on the wall. This is where things get really interesting. While retail investors were panicking about the SEC lawsuit, something incredible was happening behind the scenes. Institutions were building. Bank of America has been testing XRP for cross-border payments since 2021. JP Morgan's JPM coin is literally inspired by XRP's model. Central banks in over 30 countries are piloting digital currencies that use XRP ledger technology. Marcus showed me documents. I can't reveal sources, but let's just say they're from inside major financial institutions. The pilot programs are working. The cost savings are real. The efficiency gains are undeniable. One major US bank, I can't name them, but you definitely have an account there, is saving $40 million annually just from their limited XRP pilot program. When they scale that globally, we're talking about billions in cost savings. And here's the thing about banks. They don't adopt new technology slowly. Once they commit, they go all in. We saw this with ATMs in the 80s, online banking in the 90s, mobile payments in the 2000s. The adoption curve is always the same. Slow at first, then sudden and overwhelming. But Marcus saved the biggest bombshell for last. China. We all know China banned Bitcoin mining and trading, but they never banned XRP. In fact, they've been quietly building their own CBDC infrastructure, and guess what technology it's based on? The digital yuan uses a modified version of the XRP ledger. China processes more international trade than any other country. When they fully deploy their CBDC system, and Marcus believes that's happening in 2025, they'll need massive XRP liquidity pools for international settlements. We're not just talking about Chinese banks here. Every bank that wants to trade with China will need to integrate with their CBDC system. And that system runs on XRP technology. Marcus estimates that China alone could drive $50 to $100 trillion in annual XRP transaction volume. At those numbers, you need a high XRP price to provide adequate liquidity. Basic economics, more demand, higher price. Now, let's be realistic about timing. Marcus isn't saying $1,000 next year. He's not even saying next decade. His models suggest we'll hit major price milestones in waves, $10 to $20 by 2026. As regulatory clarity drives institutional adoption, $100 to $200 by 2026. 2030 as CBDC integration accelerates globally. 500 to 1,000 by 2035 to 2040 as XRP becomes the global settlement standard. That last number assumes XRP captures 15 to 20% of global payment flows. Is that realistic? Marcus thinks it's conservative. He believes XRP could capture 30 to 40% market share once network effects kick in. But even at 10% market share, we're still looking at $300 to $500 per XRP. That's still a 10,000% return from current prices. I'll be honest, this research messed with my head. For weeks, I couldn't sleep. I kept running the numbers, looking for holes in the theory. I wanted to find reasons why it wouldn't work, because the implications were too big to process. If Marcus is even half right, XRP isn't just a good investment, it's generational wealth. We're talking about turning a $10,000 investment today into $3 to $10 million over the next 15 years. That's life-changing money, but it also means holding through potentially years more of volatility, bear markets, and doubt. It means ignoring the noise when XRP drops 50% in a week. It means having conviction when everyone else is calling you crazy. I've been in crypto long enough to know that the biggest gains come from holding the right assets for the right reasons, even when it feels impossible. Bitcoin holders who bought at $1,000 and held to $69,000 didn't get rich because they were smarter. They got rich because they had conviction and patience. Let me get technical for a moment because this is important. XRP isn't just another cryptocurrency. It's a complete financial infrastructure protocol. The XRP ledger can handle 1,500 transactions per second with 3 to 5 second settlement times. That's 50 times faster than Bitcoin and 100 times cheaper than traditional banking. But speed isn't the only advantage. XRP has built-in features that traditional payment systems can only dream of. Decentralized exchange, DEX, functionality built into the protocol. Multi-currency support, allowing direct euro to yen conversions through XRP escrow capabilities for complex international trade finance, automated market making for instant liquidity, carbon neutral consensus mechanism, no mining required. And here's something most people don't understand. XRP gets burned with every transaction. That's right. The supply is decreasing over time. Started at 100 billion, now we're down to about 99.98 billion. Seems small, but at massive transaction volumes, this deflationary mechanism becomes significant. Marcus calculated that at global payment volumes, XRP burn could reduce the supply by 1 to 2% annually. Combined with increasing demand, this creates a powerful price support mechanism. CBDCs are coming whether we like it or not. Over 100 countries are researching or piloting digital versions of their currencies. This isn't speculation. It's happening now. But here's what most people miss. CBDCs need to interact with each other. The digital euro needs to settle with the digital dollar, which needs to work with the digital yuan. You need a neutral, fast, cheap bridge currency for all these CBDCs to communicate. Bitcoin is too slow and expensive. Ethereum is too complex and unpredictable. Stablecoins are tied to specific fiat currencies. XRP is the only cryptocurrency specifically designed for this use case. The Bank for International Settlements, essentially the central bank for central banks, has been studying XRP technology for years. Their research papers consistently highlight XRP's advantages for international CBDC settlements. When CBDCs launch globally, and Marcus believes mass adoption happens by 2028 to 2030, XRP becomes essential infrastructure, not optional, not one choice among many. Essential. Now, I'm not going to sit here and tell you this is guaranteed. Nothing in investing ever is. There are real risks to consider. Technology risk. What if someone builds something better than XRP? It's possible, but unlikely. XRP has a 12-year head start and billions in development resources. Regulatory risk. What if governments ban XRP specifically? Also possible, but increasingly unlikely, given recent legal victories and institutional adoption. Competition risk. What if Bitcoin or Ethereum evolves to compete directly with XRP? Bitcoin is moving toward being digital gold, not payments. Ethereum is focused on smart contracts and DeFi, not international settlements. Execution risk. What if Ripple screws up the business side? This is probably the biggest risk. But Ripple has survived an SEC lawsuit, built partnerships with hundreds of financial institutions, and maintained development through crypto's worst bear market. They're battle-tested. Marcus estimates the probability of 1,000 XRP at about 30 to 40%. Those might seem like low odds, but when you're talking about 33,000% returns, you don't need high probability, you need positive expected value. Even if there's only a 30% chance of 1,000 XRP, that's an expected return of 9,900%. Compare that to the S&P 500's historical 10% annual return, and XRP becomes the obvious choice for a small portion of your portfolio. The hardest part isn't buying XRP, it's holding it. Marcus has been accumulating for 6 years. He's watched his portfolio swing from millions to hundreds of thousands and back to millions. The emotional roller coaster nearly broke him multiple times. But here's what he learned. The biggest gains in crypto don't come from trading. They come from holding through complete market cycles. The people who got rich from Bitcoin didn't day trade their way to wealth. They bought, held, and ignored the noise. XRP will test your patience like nothing else. There will be months where it does nothing while other coins pump 500%. There will be weeks where it drops 70% for no apparent reason. There will be years where you question your sanity for holding it. But if Marcus is right, if XRP really does become the global settlement standard, those periods of doubt will seem insignificant compared to the final outcome. Here's something that keeps me up at night. Network effects compound exponentially. Right now, maybe 100 financial institutions use XRP for payments. When that number hits 1,000, the value doesn't just go up 10 times, it goes up exponentially because each new participant makes the network more valuable for everyone else. It's Metcalfe's law applied to finance. The value of a network is proportional to the square of its users. Double the users, quadruple the value. We saw this with the internet, with social media, with smartphones. The first few users get minimal benefit. But once you hit critical mass, adoption explodes, and early adopters get massive returns. Marcus believes XRP is approaching that critical mass point. His institutional contacts are reporting significant increases in pilot program expansions and full deployment discussions. We can't ignore what's happening in the broader economy. Global debt is at all-time highs. Currency debasement is accelerating. Trust in traditional financial institutions is declining. At the same time, the demand for international payments is exploding. Global trade continues growing despite political tensions. Remittances to developing countries are hitting record levels. E-commerce is driving cross-border payment volumes to new heights. The current system can't handle this growth efficiently. SWIFT was built for a world with $1 trillion in daily transactions. We're now at $5 trillion and growing exponentially. Something has to give. Either we upgrade the infrastructure or the system breaks down. XRP represents that upgrade. Marcus showed me research suggesting global payment volumes could hit $15 to $20 trillion daily by 2040. At those volumes, even a 5% XRP market share means processing $750 billion to $1 trillion per day. To handle that liquidity requirement, you need an XRP price in the hundreds or thousands of dollars. It's not speculation, it's mathematical necessity. Here's something most retail investors don't see coming. Institutional money operates on different timelines than retail money. While we're thinking in months and years, they're thinking in decades. The institutions buying XRP now aren't looking to flip it in the next bull market. They're positioning for the next 20 years of financial infrastructure evolution. They see XRP as a strategic asset, not a speculative play. Marcus has connections at several major asset management firms. The conversations have shifted from if to how much. They're not debating whether to buy XRP, they're debating allocation percentages. One pension fund he knows is considering a 2 to 3% XRP allocation across their entire $50 billion portfolio. That's $1 to $1.5 billion in potential XRP purchases from a single institution. And there are thousands of similar institutions globally. When institutional money really starts flowing, and Marcus believes that accelerates post-2025 as regulatory clarity improves, retail won't be able to compete on price. We'll be priced out of accumulating meaningful positions. One factor most Western analysts miss is the global South opportunity. Countries like Nigeria, Kenya, India, and Brazil have massive populations, growing economies, and terrible existing payment infrastructure. These countries can leapfrog traditional banking systems the same way they leapfrogged landline phones straight to mobile. XRP gives them the ability to build modern, efficient payment systems from scratch. Marcus pointed out that China's Belt and Road Initiative involves over $1 trillion in infrastructure spending across 70-plus countries. Much of this involves international payments, trade finance, and cross-border settlements. If even half of these projects utilize XRP technology, and there are strong indications they will, we're talking about trillions in additional transaction volume. The Global South represents 80% of the world's population, but only 30% of global financial activity. As these economies develop over the next 20 years, they'll drive massive demand for efficient international payment solutions. This might surprise you, but climate change is actually bullish for XRP. Traditional banking consumes enormous amounts of energy. Bank branches, data centers, armored trucks, physical cash production. Bitcoin mining alone uses more electricity than entire countries. XRP's consensus mechanism uses 99.99% less energy than Bitcoin. As environmental regulations tighten globally, institutions need green alternatives for their payment infrastructure. Several major banks have committed to net zero carbon emissions by 2050. They can't achieve this while using energy-intensive payment systems. XRP offers them a way to maintain efficiency while meeting environmental goals. ESG investing is driving trillions in capital allocation decisions. XRP's environmental advantages could become a major competitive advantage as ESG considerations become mandatory for institutional investors. After 3 weeks of research, after dozens of conversations with Marcus, after modeling every scenario I could think of, I made a decision that changed my entire investment strategy. I sold half my stock portfolio and bought more XRP. I know that sounds crazy. I know it violates every diversification principle. But when you truly understand the magnitude of what's happening, when you see the institutional adoption, the regulatory clarity, the technological advantages, the mathematical necessity of higher prices, conservative investing starts feeling like the riskier strategy. Let me be clear. I'm not betting my entire financial future on XRP. I still have an emergency fund. I still have other investments. I still have income sources. But I allocated a significant portion of my long-term wealth to what I believe is the trade of a lifetime. If I'm wrong, I'll still be fine. If I'm right, I'll never have to worry about money again. The most important thing Marcus taught me is this. In investing, being right isn't enough. You also have to be patient. The biggest fortunes in history were built by people who identified massive trends early and held through all the noise and volatility. Railroad barons who held through the panic of 1873. Oil investors who held through the boom and bust cycles of the early 1900s. Technology investors who held through the dot-com crash and emerged with Google and Amazon. XRP might be our generation's railroad or oil or internet stock. The technology is proven, the use case is clear, the adoption is accelerating. The only question is whether we have the patience to hold until the world catches up to what we already see. Marcus has been holding for 6 years already. He's prepared to hold for 10 more. That's the level of conviction required for generational wealth. Before I wrap this up, there's something Marcus showed me that I haven't told you about yet. Something that made my blood run cold when I realized the implications. He pulled up a document on his laptop. I couldn't take pictures, but I could read it. It was an internal memo from one of the world's largest sovereign wealth funds, the kind that manages entire countries' oil revenues. They were discussing a potential $5 billion XRP allocation. $5 billion. And this wasn't some speculative punt. This was strategic positioning for what they called the inevitable digitization of global reserve currencies. They weren't buying XRP hoping it would moon. They were buying because their economists had run models showing XRP becoming essential infrastructure. Marcus told me this fund isn't alone. He's aware of at least 3 other sovereign wealth funds having similar discussions. When you're talking about countries positioning themselves for the future of money, you're not dealing with speculation anymore. You're dealing with geopolitical strategy. Think about it this way. If you're managing a $1 trillion sovereign wealth fund and you believe XRP will capture even 5% of global payment flows, you need to own a significant position. Not want to, need to. Because if you're wrong and don't own any, you failed in your fiduciary duty to your citizens. But here's the really crazy part. Marcus estimates that if just 5 major sovereign wealth funds allocated 1 to 2% of their assets to XRP, that's roughly 15 to 20% of XRP's entire circulating supply. Gone. Locked up in institutional vaults for decades. What happens to the price when supply gets that constrained? Basic economics tells us it explodes upward. Here's another catalyst most people aren't talking about. Ripple is planning to go public. Not this year, probably not next year, but Marcus's sources suggest 2026 to 2027 is realistic. When Ripple IPOs, several things happen simultaneously. First, it validates XRP in the eyes of traditional investors who won't touch crypto, but will buy shares in a profitable payments company. Second, it creates natural buying pressure, as institutional investors who buy Ripple stock also need XRP for their treasury reserves. But the biggest impact is psychological. A successful Ripple IPO at a multi-$100 billion valuation sends a clear message to the market. This technology isn't going anywhere. Marcus showed me preliminary IPO valuation models that put Ripple at $200 to $500 billion post-public offering. For context, that would make it larger than most Fortune 500 companies. You don't achieve those valuations unless your underlying technology, XRP, is processing massive transaction volumes. The IPO also unlocks something called the public market premium. Private company employees with XRP holdings suddenly have liquid, publicly traded wealth. They become natural XRP evangelists within their networks, spreading adoption organically. We're living through the largest generational wealth transfer in human history. Baby boomers are passing an estimated $68 trillion to younger generations over the next 20 years. Millennials and Gen Z don't think about money the same way their parents did. They're digital natives. They understand cryptocurrency intuitively. They don't trust traditional banking systems that failed during 2008. And they're inheriting enormous amounts of capital, right as XRP is positioned for mass adoption. Marcus believes this generational shift could drive $1 to $2 trillion in new crypto investment over the next decade. And XRP, with its real utility and institutional backing, is perfectly positioned to capture a significant portion of that flow. But it's not just inheritance money. Younger investors are earning more, starting earlier, and allocating higher percentages to alternative investments. The old 60-40 stock-bond portfolio is dead. The new model includes significant cryptocurrency allocations, and XRP's risk-adjusted returns make it an obvious choice for sophisticated investors. Here's something I didn't expect to discover. XRP might actually be the best hedge against traditional financial system collapse. Not because the system will definitely collapse, but because XRP can function completely independently of existing banking infrastructure. If SWIFT went down tomorrow, due to cyber attack, geopolitical conflict, or technical failure, international payments would grind to a halt. Trillions of dollars in trade would freeze. The global economy would face a crisis unlike anything we've seen. But XRP keeps working. It doesn't depend on SWIFT, correspondent banking relationships, or even traditional internet infrastructure. The XRP ledger can run on satellite connections, mesh networks, or any communication method that can pass data. Central banks and governments understand this. They're not just adopting XRP for efficiency gains, they're adopting it for financial security and independence. In an increasingly unstable geopolitical environment, having payment infrastructure that can't be weaponized or shut down by adversaries is invaluable. Marcus pointed out that this insurance premium alone could justify significant XRP valuations. Countries might hold large XRP reserves, not because they expect to use them regularly, but because they need to guarantee payment capabilities during crisis situations. Most cryptocurrencies face an existential threat from quantum computing. Bitcoin's encryption could theoretically be broken by sufficiently powerful quantum computers, potentially making all existing Bitcoin worthless overnight. But XRP's architecture is different. The XRP ledger uses quantum-resistant cryptographic methods and can be upgraded to new encryption standards through network consensus. This isn't theoretical. Ripple has been researching quantum resistance since 2019. As quantum computing advances over the next 10 to 20 years, cryptocurrencies that can't adapt will become obsolete. XRP's upgradability could make it one of the few surviving cryptocurrencies from the current generation. This creates another layer of long-term value. It's not just about capturing payment market share, it's about being one of the few cryptocurrencies that can survive the quantum transition. That survival premium alone could drive massive price appreciation. Let me share something personal that might sound weird. Ever since Marcus convinced me that 1000 XRP is possible, I've been having dreams about it. Not good dreams, stress dreams. I dream about selling too early, about missing the run, about not having enough when it happens. I wake up in cold sweats, thinking about all the XRP I could have bought but didn't. But then I remember what Marcus told me. The biggest risk isn't buying XRP and being wrong. The biggest risk is not buying XRP and being right. Think about that for a second. If XRP hits $1,000 and you don't own any, how will you feel? If your friends, family, colleagues become millionaires while you sat on the sidelines because it seemed too risky, how will you sleep at night? I've decided I'd rather be wrong and lose some money than be right and miss generational wealth. The regret of missing a 33,000% return would haunt me forever. The regret of losing money on a calculated bet, I can live with that. Here's a technical concept that blew my mind when Marcus explained it. Network velocity. As XRP adoption increases, the speed at which XRP circulates through the economy accelerates exponentially. Right now, most XRP sits idle in wallets. But as it becomes true utility infrastructure, each XRP token gets used multiple times per day for different transactions. One XRP might settle a payment from New York to London, then immediately be used for a transaction from London to Tokyo, then flow to Singapore for another settlement. This velocity multiplication effect means you need fewer total XRP tokens to handle massive transaction volumes, but those tokens become incredibly valuable because they're constantly in use. Marcus showed me velocity calculations suggesting that at full global adoption, each XRP token might facilitate $10,000 to $50,000 in transaction volume annually. Even if Ripple takes tiny fees from this activity, the utility value of each token becomes enormous. It's like owning a highway toll booth on the information superhighway of money. Every transaction that flows through generates value, and that value accrues to token holders through increased demand and decreased available supply. Something massive is happening in corporate finance that most people are completely missing. Companies are starting to hold cryptocurrency on their balance sheets, not as speculation, but as functional treasury management. Tesla holds Bitcoin. MicroStrategy holds Bitcoin. Square holds Bitcoin. But these are all stores of value plays. The next wave will be utility holds. Companies holding XRP because they actually use it for business operations. Marcus knows a Fortune 500 company that processes $2 billion in international payments annually. They're spending $40 million per year on transaction fees and currency conversion costs. Their CFO ran the numbers on switching to XRP rails and found they could save $35 million annually. But to make the switch, they need to hold significant XRP treasury reserves to ensure liquidity during peak transaction periods. We're talking about $100 to $200 million in XRP holdings just for operational purposes. Now imagine this across thousands of multinational corporations. The corporate treasury demand alone could absorb millions of XRP tokens, permanently removing them from tradable supply. Brace yourself for this one. XRP is coming to retirement accounts. Marcus has inside information about major financial firms preparing to offer XRP investment options in 401k plans, IRAs, and pension funds. This isn't happening tomorrow, but regulatory clarity is paving the way for 2025 to 2026 launches. When it happens, the psychological impact will be enormous. If XRP is safe enough for grandma's retirement account, it's safe enough for everyone. But the financial impact is even bigger. Americans have roughly $35 trillion in retirement accounts. If even 0.5% gets allocated to XRP, that's $175 billion in new investment demand. And retirement money is patient money. It gets bought and held for decades. The beauty of retirement account integration is that it creates automatic, recurring buy pressure. Every paycheck, millions of Americans would be dollar cost averaging into XRP through their 401k contributions. Marcus believes retirement account integration could single-handedly drive XRP prices above $100 within 18 months of launch. The combination of massive inflows and long-term holding periods creates the perfect supply-demand imbalance for explosive price appreciation. After everything I've shared, after all this research and analysis, I need to tell you the real reason I believe in 1000 XRP. It's not the technology, though that's impressive. It's not the institutional adoption, though that's accelerating. It's not even the mathematics of global payment flows, though those are compelling. It's the certainty in Marcus's voice when he talks about it. This is a guy who's made hundreds of millions in traditional finance. He doesn't need to be right about XRP. He could put his money in index funds and live comfortably forever. But he's betting big on XRP because he sees what's coming with the clarity of someone who's been inside the system for decades. When someone with that much experience and that much to lose tells you they're willing to wait 15 years for 33,000% returns, you pay attention. When they show you documents and models and institutional conversations that support that thesis, you take it seriously. I'm not asking you to believe me. I'm not asking you to buy XRP. I'm asking you to do what I did. Dig deeper. Look beyond the surface level price charts and social media hype. Understand what's really happening in the global financial system. Because once you see it, really see it, you can't unsee it. And you'll understand why 1000 XRP isn't just possible. In a world where XRP becomes the global settlement standard, it's inevitable.